news is a report that's coming in from Bloomberg that's talking about the potential merger between Reliance Industries media business and Disney's media business. This is, of course, as we're saying, this is a Bloomberg report. There is no independent verification of it just yet. But that report suggests that there will be a binding pact to merge media operations of these two giants in India. Vamakshi is here with the details of this note, and then we'll get some perspective on what it will mean if this indeed were to play out. Vamakshi, give us the details. Okay, Vamakshi, sorry, we're going to have to come back to you in a bit. I think there's a bit of a issue in that audio line. But let me just point out what the Bloomberg report is actually saying. In terms of ownership, it says that Reliance is likely to own the bigger majority. 61% is likely to be with Reliance, and the remaining is going to be with Disney. Vamakshi, if you can hear us, any valuations? Because Disney's valuations, Disney India's valuations have come down substantially from the last 1 year or so when, there was the first round of buzz of this deal perhaps being in the works.
Well, absolutely. The Bloomberg report suggests that RIL and Disney have signed a binding merger pact. They will be merging their media operations in India, and the deal is likely to be announced early this week. Now, keep in mind that we have not actually gone ahead and verified this report independently. And in fact, like you rightly mentioned, the ownership structure will be divided as 61% to RIL and its affiliates, while the rest will be held by Disney. But this stake split may actually change depending on how Disney's other local assets are factored in. Now, when we talk about valuation in particular, a recent report by Wall Street Journal suggested that the deal could value Disney India's operations at nearly $3.9 billion, or roughly around 32,000 crore rupees. Now, back in October, we had also seen reports come up, and in fact, the valuation out there from RIL's end was somewhere between 7 to 8 billion, and from Disney's end, it was somewhere around 10 billion. So definitely a sharp knock of the valuation is that what we're seeing. But additionally, there's one more announcement that we should also take a note of, is that RIL is also mulling over the acquisition of Tata Play Limited, which is a broadcast service provider. And in fact, Disney in turn owns a minority stake in this company. So definitely that will be another factor that we will be keeping an eye out for.
All right, Vamakshi, thanks a lot for joining in. And that was the Bloomberg report there on the potential merger between Reliance and Disney. Let's get some more perspective on this. Karan Taurani of Elara Capital is joining us now to discuss more on this. Karan, good morning. Thank you so much for joining in. What does this potential deal do? How strong does this make Reliance's media business and to TV18, to Network 18 and all of these entities, if at all this does go through? How strong does this become?
Hi, good morning. So let's assume that potentially, this deal goes through. I think this will be a very big structural disruption for the M&E industry in India, because if you look at Reliance today, through Jio Cinema, they have already made very strong inroads on the digital side as far as content is concerned. They've kind of disrupted the market with free offering, and that's put pressure on ad growth on the TV side as well. So I think, they will probably get both the IPL rights of TV and digital if this deal goes through. And they'll have very strong clout in the ecosystem. So 3-4 things, which will happen in a very major manner. The first thing is that they could put pressure on the other telecom players because, Jio will now have a wide variety of content. And I think Airtel could see a negative impact here because they probably will need to invest into content or some other kind of offerings, because the largest variety of content, sports, web series, movies, the entire global catalog of Disney is going to be very large in terms of offerings. So that's one thing, that the negative impact on the telecom companies. Second is this could also impose pressure on the linear TV channels. So if you look at, Disney and Viacom, rather, they have more than 45% TV ad revenue market share. And basis this, many of the smaller channels will, feel the pinch here. With Zee-Sony merger not happening individually, these companies could also see the negative impact of this deal. Third potential thing is the pressure on OTT companies. So the OTT market, we've got global giants like Netflix and Amazon. With Jio Cinema having such a large variety of offering, and with Disney's content coming on board, this could offer a negative impact for the global OTT companies like Amazon, Netflix also, and probably impact, their India plans. So I think largely it's going to be disruptive across the board for linear TV companies, for OTT platforms, and for telecom companies.
Okay, this is obviously very, very big. Karan, good to have you on the show. Can you elaborate a little more on the possible revenue implications, perhaps? And I mean, I'm not too sure because it's not listed, so I'm not too sure about the actual financials of Disney's India business. We know that the valuation has come down to what used to be at one point in time 10 billion to now, if the latest report is to be believed, about 3.9 billion. So in terms of further investments, will Reliance have to invest a lot more? What about the ROI on that investment and just overall profitability as it takes on this asset?
So I think, if you look at the growth rates in the linear TV segment, they have kind of converged in a very sharp manner over the last 3 to 4 years. And in the post-COVID era, things have worsened off. So I think on a steady state basis, linear TV is not growing more than 3 to 4%. The only respite is that sports is growing at a faster clip here. Sports probably could grow at 7 to 8% on a steady state as far as linear advertising is concerned. But last year, because of Jio Cinema offering IPL free of cost, there was a dent therein as well. But nonetheless, I think from here on, steady state sports could see a CAGR of about 7 to 8% as I'm talking about. So from a Star India perspective, I think in terms of broader revenue growth, they are more present in the urban GEC genre. They are more present in the sports genre. In fact, somewhere close to 35% of their ad revenues are from sports. And this number was significantly higher, when they had, larger chunk of revenue driving from IPL, because IPL was behind the paywall on the digital side. So sports still is a large proposition. And in terms of the urban GEC, they are phenomenally present. Regionally, they've got a very strong presence as well. So I think in terms of potential growth of revenues for the linear TV side, because there is sports, we may see, them growing at about, 4% on a steady state. That's the revenue growth potential. As far as profitability is concerned, I think there's a big negative, because the kind of content they invest into is very expensive in nature of the Hindi side. And sports, if you look at the proposition, IPL rights were 2.5 times, as compared to the earlier cycle. Even the World Cup tournaments, the ICC rights, which came for renewal last year, they were about 2 times the earlier cycle. So the content costs for sports have increased. They've kind of doubled up versus the earlier cycle. But revenue potential is not much as far as linear ad revenue growth is concerned. So I think from that standpoint, you will see losses for the next 2 to 3 years on Star India's financials as such. And generally this happens, right? Whenever you acquire any sports property, it is kind of back-ended. So you might see some respite in third, or fourth, or fifth year. But the first 2 to 3 years, because the content cost is so high, you are tend to make huge losses in this segment.
Karan,
so I think
Karan,
on
Karan,
a steady state, if they have sports under the kitty, they can't make an EBITDA of more than 3 to 4%.
Okay, so just for the benefit of our viewers, because you gave us a lot of numbers, so at a revenue run rate, the combined entity, you're saying about 7 to 8% revenue growth. Is that right? On the sports business alone?
No, 7 to 8% on the sports business, yes, on the linear TV side, yeah, for both the companies.
Okay, and that's on sports. And if you throw in the Star India business, then you're saying the combined growth could be about 4% or so.
Yeah, so I think if you look at the GEC part, that business is not growing more than about 1 to 2%, and sports growing by 7 to 8%. So the total growth will not be more than 4 to 5% on a steady state. This is the linear TV revenues I'm talking about of Disney India and Viacom.
Right. All right, Karan, we leave it at that. Thank you so much for joining in and sharing your perspective on this potential large deal in the making. We'll keep you updated as there are any official announcements that come around. Let's slip into a break now. Up next, we'll discuss what's buzzing in the commodity space. Manisha Gupta will be joining in with the details. Stay tuned. We'll be right back.